So, welcome to the tutorial here. I want to show something which I kind of discovered is the wrong way for that, but I know that some of you guys are doing the ORB and the open range breakout, and what I want to show you guys here is kind of how to put the strategy on steroids. And I'm not cherry picking here, so I will show you several days how this can work. So I'm starting out with one of these days here where we cut kind of back. It's the 28th of January. And what you actually do is you need Deepcharts for that. I have not found any other indicator where you kind of get this. You only need the Deepcharts, and you need the Deepcharts. I don't know if you can see that here. Oh, you maybe cannot see what I'm opening here, isn't it? There is an indicator which is called delta bars. And this delta bars is what you get here. It's the normal kind of delta bars. I have not changed anything in the settings. The only thing I have done is kind of I marked out a line 1,000, 500 above, and 500 and 1,000 below. It's on the 5-minute chart. It's on the NQ. And what I recognized is actually I'm doing what gives you the confirmation of an ORB. That's always my ask, because it closes below. Okay, could be good, could be bad. But what I do now is actually I'm not marking the highs and the lows. I just mark the lowest close or open, and so not the wicks. And as you see, kind of I mark this out here. And my confirmation of a good trade would be when it breaks above or below that it has hit here the 500 or even better the 1,000s. So which means, as you see here, was kind of the first 50 minutes. So mark out the first three 5-minute candles, which is 1, 2, and 3. You see here, and as low as it breaks here, this will be the first one. As you see, not enough delta volume. Second one here would be enough delta volume, so this could be more or less an entry point for that, but it's not broken out of the zone. So which means, from my point of view, this is not a real valid setup in this case. So I would not take this trade. It could be risky, because it can be good, it can be not good. Actually, I think when you have a 5-minute bar and you have a negative delta like this, so accomplishing, so purple or red and red, or purple, how you want to do that, and it goes over 500, it's a most likelihood that it goes below, but my stop loss would be kind of on the end of this bar. End of this candle. So this is not a valid setup. So we go to the next day. As I said, there's no cherry picking. No cherry picking. The next day. The next day is the 29th. So we start here. We have the first 3 candles, 1, 2, and 3. So this would be the ORB zone. So not the highs, not the lows, not the wicks. And as you see, was a negative one, a negative one, a negative one. So this was a big negative delta. And as you maybe already understand is, when you have here a big negative delta going down, the likelihood of it goes lower is really big, which I witnessed. So which means when you go here, you see this candle here closed underneath. But what is the bad thing here? It has not got the delta. It made that wick of the delta. This is a dangerous trade. I would maybe take just here kind of the stop loss around here, or maybe on the previous candle kind of, and would have taken the trade. In this case, it would run good, would have give you a, let's say, good confirmation. But if you take a look at this here, this would be again a very big delta. Maybe this would be an entry point here. So you could maybe take this here as an entry point. Go to the next day, 29th, on the 30th. Looks like a little bit of a choppy day. Go here, first 3 candles will be marked out. Just the highs, not the highs, not the lows, the open and closes. And as you see here, there is no real confirmation. This would be a trap. This would be a loss here. In this case, this would be a loss because it closed below. It was on 500 underneath. Yeah, that would be not a good trade. It would be kind of retraced already, kind of that things. If you take a look, every time you put breakout of this zone, of this orb, you have to take a look that the delta bars are kind of accompanying that. Go to the next day. And here you see, again, the orb, opening range, and big move up. This one, not so good as well. So you question now why I'm telling you all of that. On good days, and this is really like it is, on good days, you really have great trades. And this one here, that's the reason why I show you that. 3rd of February, big rush down. Big rush down, candle, that one was above, that one rushed down. You have a big delta here. This would be a good entry point. And here we go. This was actually a trade I have taken some days ago, 2 weeks ago, which was kind of a brilliant trade. This is a real 1A, triple A, whatever we want to call it, 1+A setup. This is something you really can kind of trade. Crazy good setup in this way. So this, we just pull out the volume profile here. Another one, next day, 4th of February. Again, we mark it out here, and as well here, this would be the candle here. You would have got a retracement here, but you would have already taken some profits on the way down here. So you really see that it wicked out, goodbye. And now I come to something which has nothing to do with the orb. I go back here. And if you maybe have seen, we started out here. What I recognized, and this is something which is kind of the orb, if you want to have more confirmations, or I have taken a little bit more on the risky side, the first candle that breaks the 500 mark, so not just the wick, totally gets usually my trade. And if it it's very important to know, where do I put my stop loss? So when this would be a trade here, and if you take a look at this, this would kind of, it broke the 500 here. Like 40 minutes into the session, it broke it here. I would have put my stop loss 2 candles before, calculated my risk for a 1-to-1 or 1-to-2 trade. This would be kind of my trade here. From that point on, it should be here, I would trade it. You had got a drawdown, you have to accept that. It would be a kind of a like a 30-point drawdown with, I don't know, let's go here, let's make, for instance, make a stop here. Let's take a look. Stop loss over here. Oops, wrong. So I can simulate it here a little bit. Wrong. Stop loss over here would be $100 stop loss for a TP of 212. Where to exit? It's a good question, isn't it? Where to exit? I would usually say you usually will kind of take take profit here, and you wait. This was a gap fill, so I would wait it up here, but I would make it a 1-to-1 trade. So which means here, like after roundabout was like 40 minutes, you would have a 1-to-1 trade. If you kept it running, you maybe have a 1-to-2 trade. Go to the next day, and now come the good days. First candle below, second candle already reached it, and now comes the good ones. Here we go, stop loss above here, and this one you could have trailed forever, more or less to down here, and this would be at least a go here. This is just with 1 micro. This is nothing. This is no big risk. We're not risking a lot of money. If you have a prop account, you could have risked it. Like I always say, I usually put it in on the candle here. This would be maybe kind of, this was the candle. This was the candle closure here. Maybe kept it over here on a stop loss. This would be kind of waiting, dropping down. Next candle, this candle here. Put the stop loss here. This candle here. Put the stop loss here. Put it here. Put it here. Put it here. Put it, maybe put it here. It got down. Put it here. You would be stopped out at 850 with 1 micro. This is a 1 micro trade. But this is very important to note. This is absolutely no real big risk. It's $150 for $800. Go on the next one. Choppy day. And even here, if you see that, 500. And what I would do on that side here, so we put it in here, and when you really take it with completely blind, let's say like you do it completely blind without putting anything, any other factors in, even here, you got here, you put the stop loss underneath the close here, and I've taken the take profit. In this case, because it maybe would wick down, would wick up again, I would maybe have taken a break-even trade. So if it rolls against you, maybe take a break-even trade. Put it here, put the stop loss over here, take some dollars, go home. It could be days like this. As you see, and even intraday, it's working sometimes. So next day, and this one is a brilliant one as well. I can remember I did this as well. Was first 5 minutes are gone. It was a hell amount of delta going on. It was over 1,000. This is a very, very good trade. Go here, put in stop loss underneath. Again, usually my stop loss is $100, which means it would be over here. And if it trailed it, you maybe would have ended up here with $170, or you would ended up here at 435. So this is actually how you do. You also can take a look a little bit at the deltas, because if the deltas stay positive, which means it can go up, can go up. A little bit of a retracement here, a little bit of a retracement here, but still it's kind of come back and got to the upside. And if you have the nerves enough, you could have made at least, let's say, $500, $600. It's a 5-hour trade. Again, next day, 3rd of February. Also, this, as I said, I have to make a video up front. This made me 11 green days in a row. It's the same here. Oops. So, very, very big delta. Very, very big delta. Over 1,000. It wicked down. First 5 minutes. Enter here with a stop trade. Put the stop loss over here. Followed it, let's say, round about, I would say, maybe would have got wicked out at that level, would be $528. We are not talking about minis. We're talking about micros. This means you're trading 1 micro, your risk is $124 to make 528. And if you take some of the prop firms, you usually have like 5 trading days or 6 trading days where you have to make 3,000. When you have kind of passed the evaluation in the school, you know that 6 times 500 is 3,000. So, which means this is exactly how I do the trades. Yeah. So, and go to the next one, just the final one as well here. And this would be maybe a tricky one because you can be stopped out here. This would be maybe a loss. It was a very big delta on the first one. And you got stopped out. And now I have a clue for you. Often, and if you back test it, often I mark out these levels here. So there was the big delta going on. And it's a lot of times, if it breaks through these areas, it rushes down. So when there's 1,000 or even more on Delta on the first candle, this acts like a resistance. Here, even that, it would be a tiny stop out. So maybe but even if we go here, maybe let's say we risk $1,000. As said, we risk $1,000. We go here, I risk $100, and we put it up here. Say stop loss. How much heavier would be risk? It would be $210. It would be kind of a little bit more here. Okay, this would be kind of a trade. Or you maybe say, okay, this could be not the one. You maybe would have not accepted this retracement, but if you have taken a stop order here and got down, goodbye. As said, you have to a little bit take a look at the delta bars, what they are doing. As well here, it was a rush down, it was negative, it was even the green candle, it was a negative, it was negative delta. Then there was the negative delta. It rushed down. You maybe have taken the trade here most likely, got back, retraced, got down again, goodbye. And here, this would be an easy $100 risk trade for sure. And the last one, because this is a tricky one. You maybe entered here, and this is where I always say take the profits out if you can. On a CFD, you usually could have taken some profits out here, maybe a take profit or something. On futures, it would be great if it would be a tricky one. But even here, it would be a step out. But when it breaks the zone down here, and now you see the other side, the opposite side, you have here very negative delta going on this candle already, on this candle. So this could be also confirmation that it breaks now these levels here. So as said, this is no financial advice. It's just kind of my trade ideas I have in the last couple of weeks, which I learned from Fabio actually. And here we have a prime example because it's just a few days ago where you got a negative candle on the first one, but because of the character of the candle, you see, this is is a hammer. That's a hammer candle. So because of the hammer candle, I thought, not so good. This one I've taken was over here, almost no retracement, and up to the upside. Yeah, in this case, I hope you get some learnings out of it. Yeah, and hopefully you liked my video, and we see you soon on my channel again.